Hey everybody, Gary with Basecamp Trading. Let's take a look at the big dump we had in crude this morning. During the London session in crude, we had this big engulfing bar right there. You see, made a higher high and a lower low with a really bearish body. Had that topping tail. Entire body of this candle was all selling. Left a little bottoming tail because we came down to the 50, and we know that the 50 EMA and the 200 EMA on these higher time frame charts are definitely significant areas of support and resistance. So it broke it, pulled back above it, and then we had another really bearish bar. This bar opened right here, little tiny topping tail, and then the entire body of this bar was all selling, causing the 5 and 13 to cross to the downside, and followed by another really bearish bar. Obviously, this bar pushed all the way down to here. We were deep into significantly undervalued at that point. So we were due for a pullback, and of course we got a pretty big one. This whole bottoming tail right here is the buyer stepping in and buying this back up. But the bottom just dropped out of crude, and we had this big dump first thing this morning. That bearish 240-minute chart gave us a great setup on our 30-minute chart. You can see that during the London session, this is when we changed trend. We put in a lower low, a lower high, and then continued on down. Caused all of our moving averages to cross to the downside. And you can see, again, we know that the 50 EMA and the 200 are significant areas of support and resistance, and you can see that crude bounced off of this numeral time. The 50 and the 200 got real flat right on top of each other, and you see price poked underneath it, back above it, underneath it, back above it, underneath it again, back above it, touched it, back above it, touched it again, back above it. Finally got a close underneath it, but this bar pushed down and then ended up closing right back up here on there. So, and then we finally got away from the 50 and the 200 EMAs, and this was still during the London session. Kind of chopped sideways, consolidated a little bit. All of our moving averages got in alignment. And then we had the ghost pit open in crude right here, this bar. And often when the pit opens, you get a spike one way, and then crude picks a direction and heads on down. And you could see we pushed down, consolidated a little bit, set up the bear flag right here, had the pit open, triggered the bear flag to the downside, and then crude just tanked after that. If you were trading this on the 30-minute chart, take the break and then just trail each bar's top. So you had a 1-bar trailing stop. So you break here, stop goes above this bar closes, stop moves down, this bar closes, stop moves down, so on and so forth. And had you trailed it that way, if that's the way you chose to trade right there, your entry would have been the break of the bear flag, which would have put you in somewhere around 39.48, and you wouldn't have gotten stopped out till the top of that bar, which was 38.08. So potentially, again, just depending on how you're trading this, potentially at least $1,400 per contract. There was a point that you were up probably close to, let's see, what was the actual low of that bar? The low of that bar was actually 37.66. So there was a point in time where you were up, even $1,600 per contract. So you may have even gone ahead and locked in a little more than that. But again, if you were just using the 30-minute 1-bar trailing stop, you had the potential to get at least $1,400 off of that one move right there. And again, this was a really nice setup. We had the bearish 240-minute chart. All of our moving averages got in alignment, and we were confirming it with momentum. The fast and slow line had crossed to the downside up here, worked its way lower, actually moved underneath the zero line. The zero line is the line that the histograms move above and below. Came into the U.S. session, had that little consolidation and pullback, and then we triggered. At the same time, we were triggering a bearish inflection, and then down we went. So not only did we have price action, we had trend. We were making lower highs, lower lows. We had the 240-minute chart that was bearish. We had the 30-minute chart that was now bearish with a bear flag signal being confirmed with momentum. This was a very, very strong, high probability setup to the downside. And crude made a really strong move lower during the morning. This is what that looked like on our Renko chart. Right in here, we were triggering the bear flag. We broke the cloud, pulled back into our moving averages, set up the slow line zero touch. The cyan arrow is the slow line on MQ momentum coming back to the zero line. So we had a nice momentum reset, had a nice push lower, and then some. If you missed any of your entries, you had several additional opportunities. Here's our Trender Pro 2.0 signal bar, signaling a short on a wick off the 18 right here. Another Trender Pro 2.0 signal bar giving us another short wick off the 18 opportunity right there. You had another one here. And at this point, we were significantly undervalued. And you see we kind of started to consolidate and see how momentum was building. That was telling us that this move down was getting very, very exhausted by this point. But several opportunities. Again, we had a nice bearish 240-minute chart, a bearish 30-minute chart. We had the bear flag off the 30-minute chart. We were able to manage it with our Unirenko chart, several additional entry potentials on our Renko chart. So lots of ways that you could have taken advantage of a pretty big dump in crude this morning.